So I think for a first-time home buyer, it's important for them to understand what they can afford, there are many different tools in the market that you can use to understand what you can afford. But specifically, the bond originators, and more specifically Uber, has a Uber bond indicator tool that you can access, and you can go and do it all online and really understand what you can or cannot afford. And that also gives you the ability to then go and search for a home that is within your affordability, and so you're not wasting an agent's time, you're not wasting your time, and equally you're not wasting the bank's time when you go and actually sign an OTP and go and purchase a home, and you know that your bond's going to be granted. The banks generally take 30% of your gross income as a rule in terms of affordability. So if you're looking for a home for R1 million, you need to be able to afford a 10,000 Rand a month bond repayment. And if that is 30% of your gross income, then that's the general rule of thumb. And clearly you have to ensure that all your accounts and personal affairs are up to date and you don't have any arrears, etc. And that certainly helps with the process and expedites the process as you go along. I mean, importantly, when you're going through the Uber bond indicator process, is to be as accurate and truthful with your information as possible. So if you omit information that is critical in the process or is material in the process, it's just going to impede the process when you go to the bank and you apply to the bank. So be truthful, be accurate, and get as much information into that bond indicator as possible, because then it will give you as true an indication as you can get in terms of what your affordability is. Yeah, the lending mood in the South African housing market amongst the banks is quite interesting at the moment. The willingness to lend is certainly apparent. Where the banks are starting to move towards 100% bonds again, where previously, just 2 or 3 years ago, 20% deposit was the norm. So we're seeing a shift in terms of the lending criteria, etc., and certainly the banks' rules. And that bodes well, certainly for first-time home buyers and generally for the market. It improves market sentiment. It boosts the market a little bit. There are other factors that influence it, but certainly it assists with the market activity. So the perception that banks are tightening up is not true. The fact of the matter is they're very keen to lend, and they have targets that they've got to reach as well. So they want to lend, and provided that your personal information, your personal credit history is intact, you will get a loan.